Hello everyone, this is Paul from the APN Academy, and in this video we're going to be looking at the different time frames and their uses, right? So I have categorized these time frames into three, and it's exactly how we do use them and how we trade them, right? If you want to be consistent in trading, not just being able to make profits for a few days in a month and then you lose for a longer period of time, but if you want to be consistent, the first thing that you have to look at or to be keen about is this thing called timeframes, right? Because there are different things that have been spoken about timeframes, but I would like to tell you something. There is nothing that is put in place that has no use, right? You'll hear people trashing big timeframes like monthly, weekly, and daily. And then some people are trashing hourly timeframes, some people are trashing minute timeframes. But the fact is, all these timeframes were put there because they have uses, right? So this is what we're going to be looking at in this video, right? And I have categorized them into three, and we're going to look at each of them and what are the examples in those different categories and what are their different uses. So let's get straight into it, right? So the first category that we're going to look at is the analysis timeframes. Which timeframes are for analysis? And of those timeframes, what do we use them for? Guys, if you want to be consistent, be very cautious with this aspect of timeframes. People tend to ignore them or give them little attention, but they're very, very important. If you work on this issue of timeframes, you're going to sort out a lot of problems in your trading. Actually, immediately after this video, just go out and try out the few things that we're going to look at, and you'll be able to contact us and tell us what you found out, right? So let's start with analysis timeframes. Now, under analysis timeframes, what do we have under this category? One, we have the monthly timeframe, right? The monthly timeframe. Then two, we do have the weekly timeframe. Don't mind my handwriting. It's bad, I know, but it's not my real handwriting. I'm just using a mouse, right? So then we have the daily timeframe. Now, these three here are our analysis timeframes. Now, some people are going to say, no, but those timeframes are so big and what, but that's the fact. Let me give you an example. Cotton was put in place to manufacture clothes and maybe plus some medicinal uses, right? But its primary goal is a raw material for clothes, right? And also, of course, there are some materials that they use to make clothes these days, like silk and all that. But the major raw material for clothes is cotton, meaning that there's a reason as to why people plant cotton. A farmer will go to the garden, put all the fertilizers and all that to plant so that he's able to sell the raw material to make clothes, right? Now, even the same applies to timeframes. These timeframes were put in place because they have uses. These are things that maybe the big traders or even the banks are not telling you, but these timeframes have uses, right? People will be saying that, no, you can't go in monthly, you can't go in weekly, you can't go in daily and all, but each of them has a use. If you can understand them, it's going to be very easy for you. Now, let's start with the monthly one. We have said that this category here for analysis timeframes includes monthly, just a small recap, weekly and daily. Now, what is the use of monthly? The use of the monthly time frame is for direction, guys, right? The use of the monthly time frame is for direction. We do not do anything in monthly, like trading, taking trades and all that. You can draw your levels, support and resistance levels, supply and demand, whatever you're doing, but all that you're doing should be leading you or be concluding for you the direction in which the trade is heading towards. Are we following? You're not supposed to do anything in monthly. It's just simply for direction, right? Now, when you come down to weekly, what's the use of weekly? Actually, those who have been trading for a long time, here you'll agree with me. When you come down to weekly, weekly is the most important time frame in trading, right? This is what people who have been trading for long are not telling you, but the most important time frame in trading is weekly. Why? Because it's the first time frame that prints out a structure. Let me just give you a basic example. For those who are saying big time frames, you don't need to go there if you're an intraday and all that. Let's assume you're living in a house. How did those walls stand? Just answer yourself in a few seconds. How did the walls of the house stand? There is something it is standing on, and that something is called a foundation. You cannot build a house without a foundation. The same applies to price. Price, that's why there's structure. You cannot tell me that you're going to talk about structure without the big time frames. The big time frames lay the foundation for the structure you're talking about. They provide the structure and direction of the market. So even if you want to do intraday, even if you want to do swinging, even if you want to do position trading, no matter the type of trader you are, you need to understand the different time frames, because these different time frames, we use them in different ways. If you're a swinger, you have your time frame that you're going to focus on. If you're an intraday, you have your time frames that you're going to focus on, right? So weekly gives us the first structure of the market. First structure of the market. It's giving you the first foundation, the first layer, which price is going to move on. Remember, we first get the direction, then we want the structure, right? The first structure, the first foundation, that first layer, right? If you're building a house, you're going to first dig that structure. That's the first structure before even you put in concrete and all that, right? Architects will agree with me there, or civil engineers. Then, and this time frame majorly or normally is used by long-term traders. Those people are going to hold trades for months or for days. People are going to swing, right? Then we have the daily time frame. Now, this daily time frame gives us the second structure, but it's normally used by intraday traders, right? This one gives us the second structure. The daily time frame gives us the second structure, and it's majorly used by intraday traders, and even scalpers can also get their structure from here that they're going to trade. So this is the first category of time frames that we do have. We have monthly, weekly, and daily. And under this category of time frames, of this category of analysis, they are three, but each of them has a purpose, guys. Monthly for direction. No matter what you're doing there, you're not going to do analysis there or take trades, but you just want to know the direction of the market. Then the second one is weekly. Weekly is giving us the first structure. So whatever you're doing in weekly, it's giving you like a basis to make a decision on, right? Though we swingers and those people take long-term trades based on that structure of weekly. Then daily gives you the second structure. And this structure here is used by intraday and even scalpers, right? So this is the first category, or the first set of timeframes. I've explained to you the timeframes found in this category and their uses. If you have any questions, please do not forget to comment in the comment section. Now let's go to the second. Let's go to the second category. And the second category is the entry timeframes, right? It's the second. The second entry is the second type category is the entry timeframes. Now, which ones do we have in the entry timeframes? We have the hourly timeframes, right? Oh, sorry, I just forgot something about analysis. Also, we set our targets. We set our targets in the analysis timeframes, right? When you're doing a long-term, when you're a long-term trader or you're doing long-term trading, you set your targets in weekly, and when you're doing intraday, you set your targets in daily. But it's not the case for the stop loss, like I want to explain just briefly. Now, coming to entry timeframes, we have hourly. Under this category, we have the hourly timeframes. And hourly, we have very many: H12, we have H8, we have H4, we have H1, right? But the commonly used ones are H4 and H1, right? Now, these timeframes, we use them for entries, right? Now, I just want to give you an example. I've seen people telling others that, or I've seen traders discussing here and there that if you're doing analysis in daily, you should take your entry in H4. I would just like to show you a practical example. How many H4 candles go in a daily time frame in a day? How many H4 candles are in a day? There are just 6 H4 candles in a day. And how many H1 candles are in a day? Right? There are 24 H1 candles. Now, just using logic, which one are you going to use to take a trade or to even consider right? Consider to take a trade on when you're analyzing in a daily time frame. You cannot use H4 because H4 has fewer candles. By the time it's even giving you, let's say, a confirmation or a change in trend, the day is almost ending, or your target is almost being reached, meaning you've missed out a big part of movement, or you're going to have a bad entry, right? But look at H1. H1, there are 24 candles. Within these 24 candles, a structure could have formed, retests could have happened, and you can get a better entry, right? So even if these are entry timeframes, we use them differently. And now H4 is for long-term traders, long-term traders who are targeting many pips than, or looking at holding the trades longer. Their target's a bit bigger. They use H4. And then those that are targeting a bit lesser pips, especially intraday, they consider H1. And these are for intraday, right? Because the scalper doesn't use the hourly timeframes to take their trades. And then these same hourly timeframes, or what we call the entry timeframes, are also used to set stop loss, right? Remember, I just mentioned that the targets are set in the analysis timeframes, but our stop losses are set in the entry timeframes. I'll just give you 2 seconds to guess maybe why. The reason is very simple. We are setting our targets in bigger timeframes so that we have a proper risk to reward ratio, right? You set your stop loss in the time frame you're taking your trades in so that your stop loss is small, right? That's why in most cases, however much you try to adjust your risk to reward ratio here and there, you will see most traders just drawing for you tools, the long and short position tools on TradingView. But in reality, they're not achieving those risk to reward ratio targets, right? It's very hard to achieve it if you're setting them in the same time frame. It's very hard if you're setting your target in the same time frame and the stop loss in the same time frame. In most cases, you're going to be playing between 1-1 and 1-2. This is a practical example that I'm sure even you've gone through. If you're really trading markets, it's very unrealistic to set your target in the same time frame and the stop loss in the same time frame. In most cases, you're going to find yourself struggling, risking the same amount of money while looking to make the same amount of money. And that's what is making most people inconsistent. You make money today because your risk is equally as high as what you're targeting. It becomes very difficult for you, right? So this is the second category of of time frames. Now let's go to the third one. Let's go to the third one. Let's go to the third one. And the third one is what we call the refining time frames. Now, these refining time frames, some people use them as entry time frames, but rather they're supposed to be used for refining entries. Yes, of course. Okay, they're under entry time frames, but why do we call them refining time frames? It's because you have already identified your entry time frame as intraday or swing trader under the hourly time frames, but you need to get a better place to take your trade from. And this is when the refining time frames come in. And what time frames are under this category? We have the minute time frames. We have the minute 30, minute 45, minute, there are very many, minute 15, minute 5, minute 1. Other people even go up to minute 1. But the common ones, of course, are minute 30, minute 15, minute 5, minute 1. Now, these time frames are what we call refining time frames. If I have identified H1 as my entry time frames, I need to refine it by going into the minute time frames. Are we together? You have to slope down to minute time frames when refining entries to take trades, right? Do not just concentrate on H1. You will have late entries, and that reduces your risk to reward ratios, right? If you're supposed to have 1-7, 1-4, 1-3, you will find yourself having maybe 1-2.8, or if you're supposed to have 1-4, you find yourself having 1-3 point something, instead of having all your target profits or all your target pips, right? So that's why we have to refine trades. Now, these are the three categories of timeframes, and I have listed for you all the importances, right? So no matter the type of trader you are, you have, when you're choosing timeframes that are convenient or you're comfortable with, you have to put into consideration the three aspects we have looked at. One, where are you doing your analysis from? Two, where are you taking your entries from? And three, which one are you using to refine your entries, right? So these are the importances of timeframes that I wanted us to talk about today. If you found value in this video, please do not forget to click the thumbs up button. And if you're new to the channel, do not forget to subscribe. Have a great day.